This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe with a stock market update for Friday morning. So we've got a pretty big move taking place here. And, as we've been discussing, we've trying to identify the difference between a topping pattern and whether this wants to blow off here. And so we're going to get into that in detail today and give you some keys to be on the lookout for. Let's go ahead and get going. Just if you're interested in learning more about my approach, I would suggest starting with the book. I'm offering at a discount for now. Go to rabilstockresearch.com/book for more information. All right, let's start with the market conditions, and we're going to work from the bottom up. So the sentiment, which I use as a Investors Intelligence Sentiment Survey. It's the letter writers essentially, and they're still very bullish. They're sitting. It didn't change this week. It's sitting at 41%. There's a lot of bulls. The difference between the bulls and the bears is 41%. All right. So I like to track this. I've been using it for a long time. What I'll tell you is, in fact, I'm going to just show you something here real briefly. Financial Juice. What I notice here, I'm starting to work with these guys, and I've been using this program. Let me see if I can find. They have pretty regularly, maybe they just update it once a week, but there it is. The Fear and Greed Index is the CNN. You can go to CNN and get it, but this pops up on my feed. I don't know, maybe it's twice a week, maybe it's only once a week, but it seems like it's pretty close to, if you look at the Fear and Greed, now they have one for crypto, but here's the Fear and Greed for the stock market, and we're at an extreme right now, all right? It's pretty similar. I don't know that I would call it, maybe based on the Investors Intelligence, I would probably put it at more like a 75, but it's up there. It's up in that range. If we get to 45, the difference between the bulls and the bears at 45%, then I would say that they're pretty close. But I've been following that now for, I don't know, maybe the last few months since I've been on Financial Juice. And what I'll tell you is that I think it's pretty similar to the readings I'm getting here. I get a lot of questions about what sentiment indicator to use and everything. And I'm just telling you, I've been using this for 30 years, over 30 years. These guys were clients of mine originally. I knew them. I know them very well, the guy who puts this together. It's just something I'm very comfortable with. So not telling you to use that, but I'm telling you to find a sentiment indicator that you have some confidence in. And that CNN one seems like it's pretty decent. You might be able to find something better than that, or maybe something on stockcharts.com. I know they have a couple of different sentiment indicators there. Feel free to find one. Go back through history. I've actually lived through this history, going back, 30 years. I've seen it through highs and lows. I know how it reacts. I know what to look for. And I also know that a sentiment indicator is a secondary indicator. It's not a primary indicator. And what that means to me is that I don't make decisions based on this, but it does tell me when to maybe be a little bit more aggressive and when to be a little bit shyer about going nuts here. Now, this is a unique time. Because what the market's doing right now, it's showing good momentum characteristics and it's not pulling back on the weekly chart. I'm going to get into that in a minute. When that happens, and again, it doesn't happen all that often, we have to recognize that the crowd is going to be right for a stretch, for a period. So you actually want to go with the bulls right now until we get some signs that I'm going to go into in a minute, what we're looking for. What type of a reversal to be on the lookout for. There's two ways for a market to top. We don't have either one in place right now. Again, I'll go into that in a second. All right, OBOS, overbought, oversold. The RSI 5 on the weekly, I've got that over here for the S&P is at 88. Both of these are bearish. All right. They're not in a good position, but they are not the driver. I have them at the bottom. The most important ones are trend and momentum. These are the ones that if you're going to give like a weighting to, and I do create sort of a point system, and these are going to get more weight. Say maybe this is worth 5 points, and this might be worth 1 or 2. You see what I mean? So if you do that for each of these are 5. This is 5. These are 5s. All right. These are important. This might be 3. you know, and these might be 1 or 2. See what I mean? So you want to think about it in those terms. You don't want to make any rash decisions on this. You want to know where we are and what the underlying conditions are. Now, one of the things is that we've got an increase in volatility on the daily chart. I'm going to show that on the chart here in a second. We've got weekly that is starting to tick up, but it's still considered positive, and I'll show you why. And then again, the trend and momentum are very strong right now. We've got good bullish conditions in place. All right, let's start looking at some of the chart factors. So look at what's taken place in the volatility on the daily. This has not happened in a while. We've had a few little pops that have dropped back down, right? Really going back to December, we flattened out and we were trying to increase the volatility, but now we've actually turned this up to a pretty significant degree. I mean, you know, it's the type of thing that you don't make decisions based on this alone, especially when the trend is positive. But it is a factor, because when the volatility is increasing, if you're trying to put on a trade here and the volatility is going up, that means that you can get stopped out more easily. So you got to be more careful about your entries. Now, I did a third course that I'm about to put out. It looks like I'm probably going to be releasing it next week. The third course is about how I use this with the trend, and it kind of tells you which time frames to be focusing on. It goes into a lot of detail into the type of stuff that I'm discussing here. When to really lean on the RSIs for help, that kind of thing. So those are the types of things that are covered in that course. So what I want to do here, though, is explain that the weekly chart is ticking up. You see how we're getting a little bit of an up move here in the volatility? We're finally getting the size of these bars are starting to increase a little bit. Now, it's still early because it's below the declining moving average, okay? And even here, even though this popped above, the line was still declining, so it only turned neutral. So we're looking for this to reverse and for this line to reverse back to the upside. And if that happens, then this will turn negative. This is already negative. And then, you know, might actually start to see, you know, some kind of a retracement take place. But, you know, we don't want to jump the gun, and we got to use price and momentum as our, as our triggers. All right, let's start looking at the individual time frames. Now, one of the things I mentioned last week is we had a big bar to start this pinch play, right? We had a pinch play here, and we didn't have a lot of momentum, so I'm playing it as a 2 to 4 bar move. Well, we've got, what, about a week left? It's the 22nd. We're through, 22nd. So if we just blow it out, this could end up being one of those monster bars. Right now, it doesn't look that big. It doesn't look like an extreme to me. So we don't have the look of something that looks like it's about to end. All right. Now, that doesn't mean that it can't or that it can't pull back or anything like that. I'm just saying I'm looking for a signal where the market's sort of tipping its hat for me. And if we go and look at the weekly, we don't have that either. Notice how this doesn't look like that big a bar. I mean, it feels like a huge day. I mean, it's having a huge day today, the market, but it started out with a pullback for the week, and now it's starting to move again. Look at the strength here. Look at the strength here. If we start here from the 0 line, MACD has been going straight up since then. Green DI has been making new highs. Now, this is the first time the green DI isn't actually confirming, but it doesn't mean that Monday they can't tick up to a new high. But look at the strength in the rising ADX, and look at how weak the sellers are, this red DI. You see how this is making a lower high and a lower low? I mean, this is not a sign. There's just no sign of sellers yet, all right? And I think this is probably even more important to watch than this right now. So I know we're not confirming to the upside, but that might be the buyers sort of feeling like it's getting a little extended. But until someone's willing to sell a share of stock, you're not going to get this thing to go down. All right. So that's the weekly chart. Now, if we go to the daily, hold on a sec, get rid of this. Let's look at this daily. So I drew in this trend line. This is a trend line that I put on my report this week. And the reason why, and let's actually go back to the 4 time frames for a second, because I want to show you this. So if we draw in our trend line on the monthly, we can draw this line here We made a pivot low, turned up and made a new high. So we can draw this trend line. Notice how the trend line and the 18 are the same. In fact, the 40 is right there too, but we've got the slope and the price at the same level as the trend line. This is important. This is an important trend line, okay? That to me is an important level, all right? Now, if we go and look at what's going on the weekly, we don't have that confluence. We've got a trend line here and we've got a trend line here, and neither of them are overlapping with either of the moving averages, certainly not the 18. Now, it does have the same, this one has the same slope, but the distance between them is pretty significant. So I don't view it as being as strong of a condition. But if we go to the daily, we have the same condition. We have this trend line, this recent trend line that we can draw in, and it is covering up the 18. You see how the 18 on this time frame is the same? It's the same slope and it's the same price. That means that's an important level. It's a very simple way to kind of just track this stuff. And if you have that, if you have a trend line and the moving average that they're the same, I think you want to start watching it a little bit more closely. So I think the monthly moving averages, 18, and the daily 18 are pretty important. The weekly might not come into play right now because it's actually a little too far away from it. And if we go through a correction, it could turn into something that takes a little bit more time and maybe finally consolidates back towards the 18-month or something like that. I don't want to get too far ahead of myself, but the point I'm trying to make here is that I'm focusing in on the daily trend time. This is the time frame that I want to focus in on right now. And notice what happened here, something I pointed out on my Wednesday video for my subscribers. You see how we had a little reverse divergence that formed really briefly here, really quick. Now, I mean, it gapped up on earnings. It's not like you could play this, but just recognizing these things. Go back through, if you've taken the course, my original fundamental foundations course, I think you need to be able to recognize this stuff. You got to see it in real time if you're going to use this, this type of information. All right, and then finally, actually, let's look at the ADX, because Red DI tried to make a move up and cross 25, but then it quickly dropped down, and then it actually came up and made a double top and turned down. It didn't really continue. And then Green DI made a lower high and a lower low, but not at the same time as red. And then again, they kind of came, they didn't really crisscross, and then they failed. So now this is back to a new high. You see how this is a continuation? We're hitting a new high for the move. So you take this and you make that like a lower high and a lower low, but now we're going back and hitting a new high. This is confirming the price. So we look at this in conjunction with price. When price hits a new high, taking out this prior peak, we want to see if green does the same thing. It's doing the same thing. So we have to respect this as a continuation. Now, I would still be looking for one of two things. Either this is going to fail, maybe this has a little follow through into Monday and then, has some kind of a climax pattern and comes down through the 18 and this trend line, and we form some kind of an interim peak, and we get this 18 to roll over, and we go through some kind of a contraction phase over the course of the next, month or 6 weeks or something like that. I don't think that would be the end of the world if it played out like that. I would think that would actually be pretty good. The other way would be a little bit more concerning to me, and that's if we don't break and we actually do a little juggernaut move and we just keep going up. So if I drew in a corresponding trend line to this trend line. So I just created a parallel upper channel to the lower one. You draw that in. We're hitting that now. So here's what we want to look for. If we break out through that, what you're going to try and see is if the hourly chart forms a pivot low above or at the 18. We want to look at this, come down to the 18, form a higher low, and make a higher high. If we have that, now we probably have a new channel forming that's going to accelerate the trend again. Okay, that means we had sort of a trend that was going at this pace here. Now we've had a trend going at this pace here. And then what we would end up doing is probably creating a third one that goes up to the upside and breaks out of this channel on the daily chart and forms one on the hourly. So that's kind of what we're on the lookout for. Now, I mean, I think, It might be me wasting a lot of time going through all this detail because it's very possible this won't follow through and we'll break the 18. But I think if we continue to sustain this up move and carry through that channel, I think we're going to have to respect the concept that this is going to continue for now. Because in reality, when you look at the S&P chart on a monthly, it really looks pretty good. I mean, this doesn't look that bad. It looks a little overdone in the short term, but it's not like this is... Look, I can tell you back in, oh, by the way, before I forget, if you're enjoying this content, please hit the like button and also subscribe, click the bell and all that so that you can get alerts to new videos. I'm still trying to grow the channel. Appreciate your support. Now, one thing I'll tell you is in 1999, I was a co-manager of a hedge fund when the market made a move, like a crazy move, and that was based on, the internet bubble, essentially, right? Those companies were not profitable at that time, but we were up like 90% in 1999. It was just like everything was just going crazy, and you can see how far along, how long this went up. Right, and this is only S&P. If you look at what happened on the QQQ or the Nasdaq, it was really extended at that point. In this case, it's sort of a similar situation. Like, we could keep going. It's not like out of the realm of possibility. So don't try and guess. Don't say, oh, I'm taking a profit and getting out of everything. Take your profits, scale and trail, which is what I preach in my course. Take small profits along the way, continue to trail a stop. Unless you're swing trading, I do believe taking intermediate term trades and longer term trades, you're going to be better off trailing a stop and taking partial profits along the way. All right, that's the update for the week. Let me know if you have any questions. Thanks.